Hello and welcome back. So today is not going to be our regular market update video, but it's going to be, one of my educational series video. Instead, I'll go step by step in this series so that you guys can learn price action and you guys can learn, the tools that I use and maybe incorporate those tools into your own analysis if you like. So today we are going to talk about Fibonacci retracement or the Fibonacci series. You'll find this tool on most of your trading platforms. Today I'm using TradingView, so let's dive into it. So Fibonacci series is a continuation tool. So let's move towards this gold chart over here. For your step one, what you're going to do is you're going to identify, your clear lows and highs of your trend, right? And in the next step, what you're going to do is just take this Fibonacci tool and draw it over the trend. Now, if you're drawing it for the first time on the chart, it might look a bit different. If your settings are different than mine, you can just pause the video right over here and take a look. By default, all these numbers will be visible, and let me just go through them. What are these numbers and what these levels are actually telling you? So let's say if any asset is in a good trend, because the market moves in waves just like that. So let's say if the market is in a good uptrend, what's going to happen is, some investors are going to be left out and they don't want to buy any asset on these highs. What they want to do is wait for the asset to come back to a lower price where they can buy again and be a part of this bigger trend right here. So that's where the Fibonacci tool comes in. The Fibonacci tool tells you where the expected retracement can be. So if we draw Fibonacci from the lower part of this trend towards the higher part of this trend, what's going to happen is that you are going to get all these dynamic support levels that are going to indicate, the price might reverse from this level, from here, or, any of these levels. Now, what these numbers are, they are actually the percentage retracements of this trend that we've drawn our Fibonacci on. Now, let's say if this trend retraces 50%, it must come right over here to this value. If it retraces 61%, it must come here. And if it retraces 78%, that's your point right over here. So why don't I use 78 or 23% levels of Fibonacci? That's because let's say if you are in this good trend, what happens is that the 23% level is not very significant because the retracement is not that high. 33% retracement is very small for any trend, and even if a trend is retracing for 23% and then continuing, it's not a healthy retracement for any asset. And in the second case, if any asset retraces up to the 78% level, that's not a good time to buy because this indicates that the buyers couldn't hold any of these above levels. So 78% isn't a good retracement, just like 23%. So let's remove these numbers from our chart. Here we go, just like this. Now we're left with only these numbers. So 1 indicates the start of your trend and 0 indicates the end of your trend, right? And you are looking for a retracement on these three numbers only. What I've seen in my career is that people like to use only one of these numbers, and maybe 61% is their favorite number, maybe 50% is their favorite. But what I like to use is this range. Now, some people only mark a range between 61 and 50% because it is known as the golden range, but I also like to include the 38%. So what you're going to do is you're going to wait for the market to retrace back towards any of these points or towards this general range, and then you're going to look for something, maybe a candle pattern, maybe any other confluence for the market to go back up from here. So instead of buying from the top, we actually bought it at a 38% discount. And also please keep in mind that Fibonacci is only to be used in a trending market. Okay, so the context matters a lot. You can't just see a market pattern like that and try to draw Fibonacci anywhere near it. So you need to find a good trend, a good upwards trend. If you are looking for a retracement downwards, if you are an investor, if you wanna get in, then you can use the Fibonacci tool just like that, and you can enter somewhere here. So please don't use the Fibonacci tool alone. Either use it with some other confluence, like a good support or resistance, or any entry candle, or a break of structure. But please avoid using it alone, and don't use it in any ranging market like that. So that was all for today. I hope this video helped you in your analysis, and I'll see you guys again very, very soon.